Hello everybody, welcome back to our channel. If you are watching this video today, it's because you like physical gold. So either you bought or you are considering to buy the physical metal. But if you decide to invest in physical gold, you need to understand that you are buying an asset, a physical asset, and you should not be emotional about the ups and downs in price. When you buy physical gold, you have to understand that it's a long-term asset. It's not something that you buy today to sell 1 month later if the price goes higher. If you want to do that, if you want to speculate on the price of gold, you could invest in gold miners. They are more volatile than the metal, miners are more liquid, and you can also get paid dividends while you wait for the price of gold to increase. At the end of this video, I show you 3 gold miners that are paying good dividend if is this what you want. Okay, so today is Friday, 9th of July 2021. The markets are not closed yet, but gold had a good week so far. So here are some assets and how they performed this week. Apple had strong gains. Apple at the moment has gains of 3.79% on the week. Gold also strong gains on the week, 1.33%. Platinum gains of 0.6%. Nasdaq 0.32%. S&P 500 0.2%. And now oil, Bitcoin, silver, Tesla all down for the week. Physical gold is a real asset. It's something tangible that you have in your hands. Another example of physical asset is your house. You don't sell your house because the shares of Tesla are increasing in price faster than the price of your house. Why we don't do that? Because it's risky. To have a house or a physical asset is safer than gambling in the markets. Same with physical gold. It's safer to have physical gold in your hands than be investing in a company that can go bankrupt, can be sued, or share prices can go down 10 times faster than it went up. So gold is gold. It's a physical asset and you buy it for safety, not to speculate in the price. As I said, if you want to speculate in the price of gold, you can invest in the miners. So you have to ask yourself, what is your investment horizon? 1 year, 2 years, 10 years? If you answer 1 year, maybe real estate and physical gold are not the right choice for you. My investment horizon is lifetime, so it's okay for me to buy a physical asset like gold. If we look at the price of gold, it's stuck in a range. Look at this 1 year price of gold chart. Along of 1 year period, there were ups and downs. When asset prices go up, people buy, expecting it to continue the upside. When it goes down, people freak out and sell to avoid bigger losses. This is the exact opposite of what people should be doing. It's rational to buy when the price is down and sell when the price is up, of course. But us as human beings, we are affected by our emotions and we end up doing the opposite things that we should do rationally. So this is another reason why big funds are using computers, artificial intelligence to trade, because the machines do not have this emotional side that cause negative impacts on the trading. But going back to the 1 year gold chart, you can see that $2,000 gold price is in the range. So there is a top of the range and the bottom of the range, and the spread between the top and the bottom is about 20%. If you buy at the low of the range is below 1,700. So if you manage to buy at the low of the range and you are able to sell at the top of the range, you end up making a 20%. So this short term can be used as benchmark to speculate on the price. But again, if you want to speculate on the price and buy something and sell in 1 year period, then in this specific case, I recommend you to use gold miners, not physical gold. Physical gold have premiums and it's more difficult to sell than miners. So playing with the miners, this 20% spread between the bottom and the top of the range can be increased to 100%. You can also play safer and use the middle of the range, have smaller gains but reduce your risk. Personally, I don't do short-term trading. My style is to buy and hold, so physical gold and dividend stocks are very good for me. So if you want to speculate on the price, here are 3 of my favorite gold miners in regards dividends. Coming in number 3, Fortuna Gold. Fortuna Gold is a Russian miner that's able to spend only $400 to extract an ounce of gold from the ground. The other gold miners on average have to spend $800 to extract 1 ounce of gold. So Fortuna Metal trades in London and pays 4.34% in dividend. Coming in number 2, Polymetal International. Polymetal is an Anglo-Russian precious metals mining company. The shares of this company are trading for $21.83, and it has gone up in price 12% in 1 year period. The dividend yield of this company is 5.9% a year, so very good dividend. And the final company that we look is called Aura Minerals. Aura Minerals is a multinational mining company that owns and operates gold and copper mines in Honduras, Brazil, and Mexico. It trades in Toronto, Canada, as well in the Brazilian stock market. The shares of this company are trading today at 16.65 Canadian dollars, and it has gone up in price 29% in 1 year period. The dividend yield is 6.32% a year. So there you go, you can get 6.32% in dividend while you wait for the price of gold to move up. Of course, there is also Newmont Gold Corporation that pays 3.5% in dividend. The price of gold is slowly moving up again this past 2 weeks, mainly for 3 reasons. Until Thursday, there was a little bit of fear in the market. Most stocks and indexes were going lower recently, so investors turned to safety. And there is also the slow implementation of Basel III. Basel III wouldn't change the price of gold from one day to another, but it can increase its price gradually in the course of the years to come. Another factor that helped the price of gold this week was the drop in US Treasury yields. The 10-year US Treasury yield dropped below 1.3% on Wednesday and fell again overnight to 1.25%. I like physical gold and I like to collect coins and bars, but I already have an amount that largely exceeds a healthy portfolio allocation. So I should not buy more physical gold. Sometimes as a collector, I trade one coin for another, or if I see something that I like, I sell some coin or bar that I don't like too much and I use the money to buy something that I will enjoy more. There was a time that I had 60% of my portfolio in physical gold and I also had gold miners at the same time. This was last year in 2020 when gold had a brilliant performance. So when gold price crossed $2,000, I started selling the gold miners and eventually I sold some metals as well. These metals I had in a vault, which in fact I never had the metals in my hand. I bought these metals and they were directly allocated in a free vault in Switzerland. I have a video of how to use the vault. If you're interested, you can watch later. As a metal holder and collector, I have coins and bars that I really like, such as American Eagle, Austrian Philharmonic, the Canadian Maple, but these coins are produced every year. So if I eventually need to sell gold, I can sell them and buy again in the future because they are always being minted. However, there are coins that are not minted every year that I would not sell, such as this 2009 Britannia or any coin from the Queen's Beast series. These coins I will not sell. In short, I have already a significant amount of physical gold, and at the moment, if I want to increase my exposure to gold, I would pick a gold miner. Probably Aura Minerals, due to the fact that it's the one that pays highest dividend yield. But I would only do that if gold dips around or below 1,700. Still, I hope it doesn't, and I think it's very unlikely that gold will go down again. But if it happens, I have cash aside to be allocated for a gold miner. Other than that, I would like to share with you two coins that I would love to add to the stack. They are both from the Austrian mint, and for that I might get rid of few of these 20 Swiss franc gold coins. These coins from the Austrian mint have 100 euro face value, and they are very collectible. These coins have the exact same dimension of this coin, also with 100 euro face value, and also from the Austrian mint. Here they are. Gold of the Pharaohs, very beautiful coin, and I've been looking to this coin for a long time. And the other one, Gold of Mesopotamia. So let me know what you think about these two coins, and if you like them, you might see them here in the channel in 1 or 2 weeks. Alright guys, that will do for today. Thanks for watching, stay safe, protect your wealth, take care.